If you're just starting your savings journey, you've probably asked yourself, where should I even put my money? Not all savings accounts are created equal. Some earn you more, some lock your money up, and some just sit there doing nothing. In this video, we'll break down the best types of savings accounts for beginners, so you can earn more interest, avoid hidden fees, and build your future faster. Whether you're saving your first $100 or your first $10,000, these are the accounts worth knowing about. Chapter 1. Why where you save matters. If you're just getting started with saving, you might think, it doesn't matter where I put it, I just need to start somewhere. And yes, starting is the most important part. But where you keep your savings, that's what determines how fast it grows. Let me explain. The problem with standard bank accounts. Most traditional bank savings accounts give you a 0.01% interest rate, or close to it. That means if you save $1,000, you'll earn 10 cents in a year. Meanwhile, inflation is quietly eroding your buying power by 3% or more annually. So your money is actually losing value. That's why just starting to save is not enough. You need to save smart. Your money should work for you. A good savings account pays you decent interest, APY, keeps your money safe, gives you access when you need it, charges little to no fees. If your savings account isn't doing all four, it's time to upgrade. In the next chapter, we'll break down high-yield savings accounts and why they're the best first step for most beginners. Chapter 2. High-yield savings accounts, HYSA. If you're only going to learn about one type of savings account today, let it be this one, the high-yield savings account, or HYSA. This is the easiest upgrade most people never make, and it can literally earn you 10 to 20 times more interest than a regular bank account. What is a HYSA? It's a savings account, just like the one you might already have, but it pays much more in interest. While a traditional bank might give you 0.01%, a good HYSA can offer anywhere from 4% to 5% APY. That means if you've saved $5,000, you'll earn around 200 pluses a year, passively, just for letting it sit there. Where to find them? You won't usually find these at big-name banks like Chase or Wells Fargo. Instead, check out online banks like Ally, SoFi, Marcus by Goldman Sachs, or discover fintech platforms like Varo or Upgrade. Sometimes, even credit unions offer competitive HYSAs. Are they safe? Yes, as long as they're FDIC insured, or NCUA for credit unions. That means your money is protected up to $250,000. Things to watch out. For some HYSAs require a minimum deposit. Some cap your interest after a certain balance, and a few limit withdrawals per month, usually 6 or fewer. But if your goal is to let money grow, that's usually not a deal breaker. A HYSA is the perfect home for your emergency fund or short-term goals. It keeps your money safe and growing quietly in the background. Chapter 3. Online banks versus traditional banks. Let's talk about where you open your savings account, because it matters. Today, you've got two main choices, traditional banks or online banks. Both come with pros and cons, but for most new savers, one of them clearly wins. Traditional banks, familiar but outdated. These are the big-name banks you see on every street corner. Think Chase, Bank of America, or Bangkok Bank if you're in Thailand. What they offer: physical branches, in-person support, ATMs, everywhere. But here's the trade-off: tiny interest rates, we're talking 0.01% or less, monthly fees if you don't meet their balance requirements, outdated apps and systems in some cases. You're basically paying for access, but not getting rewarded for saving. Online banks, higher yield, lower fees. Online banks don't have branches, so they save on overhead, and most pass those savings on to you in the form of higher interest, zero monthly fees, better mobile apps, and automation. They're built for digital users who want simplicity, speed, and value. Examples include Ally Bank Marcus by Goldman Sachs, Sophie Capital One 360. These are safe, FDIC insured, and often offer 4% plus APY. which is right for you. If you must deposit cash often or need in-person help, a traditional bank might work. But if you're comfortable managing your money online and want better returns, go with an online bank. It's the easiest upgrade you can make as a beginner saver. Chapter 4: Credit Union Savings Options. If you want the personal touch of a traditional bank, but the rates of an online bank, there's a third option you should know about: credit unions. What's a credit union? Credit unions are like banks, but they're owned by members, not shareholders. That means their mission is to serve you, not to maximize profits. They often offer higher savings rates than traditional banks, lower loan interest rates, great customer service, fewer or no fees. And yes, your money is safe. Most credit unions are insured by the NCUA, which is just like FDIC, up to $250,000. Are they hard to join? Not really. While some are tied to jobs or locations, many now allow anyone to join, even with a small donation or by living in a certain region. Just Google credit unions near me with high yield savings. You'll be surprised how accessible they are. Why they're great for starters. Credit unions are often more flexible. They understand local needs, offer better support, may help you build credit or get your first loan later on. So, if you're new to saving and want a trusted partner, a credit union could be the best kept secret. Chapter 5: Neobanks and Fintech Platforms. In the last few years, a new wave of savings options has exploded onto the scene. They're called neobanks or fintech savings platforms. These aren't your typical banks. They don't have branches, tellers, or even bank vaults, but they do offer powerful, app-based, mobile-first saving solutions, often with amazing perks. What is a neobank? A neobank is a fully digital banking service, usually run by a fintech company, but partnered with a real bank behind the scenes. They offer slick apps, great automation tools, spending insights, round-up savings features, high-yield interest, often over 4%. Examples include Chimevaro, current Revolut Monzo, UK-based but expanding globally, pros for starters, no monthly fees, low or no minimums, easy to open and manage from your phone, smart automation that helps you save without thinking. Some even offer early direct deposit or cashback on spending. What to watch out for. Not all neobanks are equal. Some don't offer FDIC insurance directly. It's through their partner bank. Also, customer support may only be online, and cash deposits might be tricky. Who should use them? If you live on your phone, love sleek design, and want smart savings tools, a neobank could be your perfect match. Chapter 6: What to look for in a starter savings account. With so many options out there, from traditional banks to online platforms and fintech apps, how do you know which savings account is right for you? Here's a simple checklist to make the smart choice from the start. 1. APY, annual percentage yield. This is the interest rate your money earns over a year. The higher, the better. And today, anything above 4% APY is considered excellent. Just make sure the rate is not just a teaser that drops after a few months. 2. No monthly fees. You should never pay a monthly fee to save money. Look for accounts that are fee-free, no maintenance, no balance penalties. 3. Easy access and transfers. Make sure you can transfer to and from your checking account easily. Withdraw in case of emergency. See your balance in real time on an app or website. 4. FDIC or NCUA insurance. This protects your money, up to $250,000 per account, in case the bank goes under. If it's not insured, don't even consider it. 5. Automation tools. The best savings accounts make it easy to build habits, set automatic transfers, use roundup features, get reminders or insights into your progress. 6. Customer service you can trust. Things go wrong. You need to know you can reach a real human if your money gets stuck. A savings account is like a partner. You want one that grows with you, respects your effort, and supports your future. Chapter 7. Bruce's top picks for 2025. You've got the theory, now let's talk specifics. These are my top savings account picks for beginners in 2025, based on real value, strong interest, low fees, and ease of use. 1. SoFi High Yield Savings. APY. 60% as of 2025. No account fees. Automatic savings tools. Bonus. Early paycheck deposit and SoFi Credit Builder options. Perfect if you're also thinking long-term about investing. Why I like it. SoFi is a full financial ecosystem. Great if you want to grow with one platform. 2. Ally Online Savings. APY. 4.25%. No monthly fees, no minimums. Buckets and boosters help you save toward different goals. 24/7 support and an excellent app. Why I like it. Simple, intuitive, and built for people who want clarity and control. 3. Marcus by Goldman Sachs. APY 4.40%. Strong savings rates with a big name backer. Clean online dashboard, no fees, but no checking or ATM access. Why I like it. A powerful option if you just want a no-frills savings vault that grows. 4. Varo Bank. APY up to 5.0%. Conditions apply. Mobile-first neobank. Great automation features, must meet spending saving requirements to earn highest rate. Why I like it. Incredible if you're disciplined, but read the fine print. 5. Local credit union account varies by region, but many offer 5% community-driven, usually no fees, often overlooked. Why I like it. Great option for those who want personal support or are building credit locally. Remember, these aren't affiliate picks, just real-world recommendations I'd give a close friend. Final chapter, your first step. Today, saving money isn't just about discipline, it's about decision. And the most important decision is this: where you keep it. You've just learned how powerful the right savings account can be, how it protects your cash, grows it passively, and sets you up for future wins. Quick recap: high-yield savings accounts give you more for every dollar. Online banks and credit unions often beat the big names. Neobanks offer sleek, automated tools for mobile-first savers. And knowing what to look for, from APY to insurance, helps you choose with confidence. So don't wait. Open your first high-yield savings account this week. Even if you only deposit $50, you're not just saving money. You're telling your future self, I've got your back. Call to action. Health Wealth Investor. If this helped you take one step closer to financial clarity, hit like, click subscribe, and share this with someone just starting their savings journey. At Health Wealth Investor, we believe it's not about how much you earn, it's about how wisely you save and grow what you've got.